Hello. Hopefully, I got audio here. If you guys could just confirm that everything is working okay. Today, we will be talking about Meta and earnings, but we're going to go through the market recap first along the way. I do have the ticker pulled up. I got the financials up, not today's stuff yet because it still needs to refresh, but I'm sure Alejandro will be on that later. Real quick, let me fire up my other view here. Got to do all this technical stuff behind the scenes. Sorry. I hear you saying, will Meta break above 515? Maybe. We should probably pull up a chart of Meta and take a look at it. Let me just see here. Still no results. So these guys should be reporting in a bit. I believe the conference call is going to start off at 4:30. Let me just check here real quick. I think I have it on a calendar. Yeah, it's 4:30. We're good. So we will jump in to the rest of the stuff. Today was a good day today. I can't honestly complain about it at all. It doesn't look as good as it really was on this chart. I do have Tesla calls in another account too. Crypto really took a hit today, so crypto did not do well, but that's perfectly okay. I have no problem with that when I've got a day where I've made like $135,000 on Tesla. So I don't mind that at all. Probably up over $100,000 across all accounts today. The ones that took the hit, and again, Tesla was great. The leaps jumped a lot. They were up like almost 50% at one point today for Tesla, but then the stock price has actually done really well. It's up 162. So I think we'll start to see things getting a lot better here for Tesla. Tesla, I think, is quickly on its way to $175 a share. I don't think that that's going to take long at all. Based upon this conference call yesterday, it was amazing. If you guys haven't listened to it, you should. I'm seeing Meta starting to jump a little bit, not too much. We'll keep an eye on that. I'm gonna switch the ticker a little bit. I'm gonna get it a little closer and zoom in just a hair. That way, when this thing pops, we'll be able to see it. But yeah, so Tesla was amazing. Great company. Hey, Kumar, what's up, man? Just very exciting to own it. Very exciting. Alex, what'd you say? Yesterday before close, I sold all my Apple position and bought June 2026 leaps that I made. Dude, I'm happy for you, Alex. That's kick ass, dude. Good job, bro. Very, very cool. All right, so yeah, let's see what else we had today. So, not much else was up. Not much else was up. We had a lot of retraces across other parts of the markets. CleanSpark down 4.58%, Cypher down 3.74%, ArcG down 1.29%, Flux down 2%, Hood down 1.7%, MicroStrategy down 5.43%. If Tesla continues to take off, I might take just a small amount of those and start nibbling on some of my other favorite things. I will say this: I do like that PayPal was up 0.66% today. That's a good thing to see. Let's just shift over here real quick. We want to roll through everything as quick as we can. You guys see that ticker really taking off for Meta? Let me know. It looks like we might be going up a little bit. Just a quick glance though, broader markets. So Nvidia down 3.33%. I bought 40 shares of that yesterday. That kind of sucks. The only real super positive thing today was Tesla of all things. And I don't think a lot of people were predicting that would be the case, but I was. So I was one of those people, just for the record. I've only said it like 100 times in the last 24 hours. But yeah, so the rest of the market just getting a retrace. It all looks pretty healthy to me. We'll look at that. We'll look at the indices here in a second and go over those. But I'm liking what I'm seeing. And oil retraced 0.56%. Again, it kind of had a bounce yesterday. I didn't really know what that bounce was about, but this makes sense that we just continue to trade in this zone and I think eventually test the $80 range, barring any major geopolitical issues, which I don't see coming, guys. I really don't. Let me see. How's chat doing here? Looks like it's good. Hopefully it's still good. Yeah, there we go. Good afternoon. Good afternoon, George. What's up, man? All right, so oil not looking bad. Dollar up 0.12%. Again, I told you it could just meander and chop here for a while. I like chop. Chop probably leads to more downside. Probably doesn't lead to upside unless we really start to see pressure on countries like China. I still do not like China at all. I think it's a mess. I love the people, like 90% of them. The other 10% CCP people can fuck off. If you guys are playing bingo, I covered the China segment right there. But yeah, the dollar, though, I think could continue to just tread sideways. From what I'm seeing, China is boosting a lot of liquidity to try and help their markets. They're really trying to hone in on different sectors like the phone segment, the auto segment, and a bunch of others so that they can drown out competition overseas and try and basically just control those markets. I don't think that's going to work for them, but in the process of doing that, they're pumping liquidity, and we like liquidity, so you can't be mad. Now, gold is down 0.1%, so I guess you've made less than 21% now in the last, how many years? 2011, 14 years, pretty much. Not a great number. Not a great number. Shitty store value. Move index, the bond volatility index, did nothing. Just hanging out. Flux, I don't know. I haven't looked at Flux in the last couple of days. I think it was down 2% today, but that's not too crazy. We can look at it in a second. Hey, if you guys could too, if you could smash the like button, I really appreciate it. It helps the channel a lot, and it's just a great kind thing to do if you're a good person. If you're not a good person, then do not select the like button. If you're a shitty person, if you're like Ross Gerber, oh hey, Meta's going down. Let's take a look here. Woof. Oh, this is interesting. Meta's like practically 2% of the GDP, guys. So this is fascinating. We're down. Well, we were down like 8%. Now we're down 5.45. Let's see what we got here real quick. We're going to jump over. Let's see if they have their earnings. I don't see the new one. Something might be out there, though. Let's check X. Sometimes people on X, like, they get the shit before you can even get it off the site. Let me see here. Huh. What was that command control, like command shift R to force a refresh? Was that right? I don't remember. Oh, I think I just did it. But no, it still doesn't show it. Where are people getting this? Where are people getting this? The stock is plummeting. Super glad I don't have Meta right now. Down over 10%. And falling hard. What did their guidance look like? Now this makes me very interested to see what Google is doing tomorrow. Let's see here. Kingdom Sounds. EPS 471, beating expectations at 436. Revenue 36.46 billion, beating expectations at 36.22. So it's forward guidance. It's whatever they said going forward did not make the crew happy, because they're getting walloped. Let me just check over here. I'm going to go to press releases maybe. Maybe they got it on their press release. Announced first quarter. No. I bought 5,000 Meta at 490, lol. Sorry, bro. That doesn't sound like a great day. I apologize. All right, let me see here. Let me go back. Financials. Come on, where's the results, yo? Quarterly earnings. That's what I want. Q4. I don't want Q4. Well, eventually we'll get to that. We're going to keep moving on. If you guys see that their page, their investor relations quarterly results are out, let me know and I'll pull them up. Otherwise, I'm going to keep rolling through economic data. Now, today we saw 30-year mortgages jump to 7.24%, so we're getting higher here. Not loving that. That market is still incredibly frozen, as we've talked about numerous times, but it's better than the almost 8% interest rates that we were hitting in October. So still a low number in comparison. All right, mortgage applications down 0.27%. So this is just flopping around. It all looks really shitty when you look at it over the longer haul. It was just released. Let me see here. I still don't have is there a better U on their page? Do I need to go to the home? Let me go to the home. Where am I looking at it? Q1 earnings. That's just the earnings call. Meta report. Okay. Oh, so you got to go here. That sucks. I hate that. Why don't they have it on their other? Download the press release. Let's see here. Do they have the slides and any of that stuff? So they just have the press release. They just got to have the numbers. That's it. I don't want to crunch the numbers. We'll have that stuff updated in a second in visualstocks.com. So I don't care so much about that. I want the slide level info. So we'll just wait. We'll wait for that. Other people can slice and dice and try and figure all that out and look at every single line item. I really don't give a shit. All right. So we'll get back to that in a second. Mortgage market index ticked down. Mortgage refinance index ticked down. All this stuff is just horrific. It's just horrific. When you look at these numbers, they're so bad. I mean, like, look at these levels that we're at right now. They go back to the 2000-ish range. It's just the mortgage market is completely frozen. I don't think that's a surprise to anybody. Once rates start coming down, which I think they'll do soon, and I give so many reasons and justifications for why they're coming down. I mean, they're coming down, and that will improve as long as unemployment stays good. I'm gonna end this poll I had going. Did people vote on that? Let me see here. What did we get for an answer here? 48% said Google. 45% said market recap only. You know what I'll probably do? I'll probably just be dynamic on it tomorrow, guys, with the Google earnings call. I'll probably make it to where I'm ready to go with that. And if it's interesting, then we can jump into it. And if it's not, then we'll just do the market recap and pull up stock ticker symbols and look through financials and technicals and do all that stuff. So I'm going to end the poll. That's the game plan for tomorrow. Meta looks like it's going to be interesting, though. We should probably know what's happening there. You have to realize they make up a huge percentage of GDP. It's like 2%. It's a stupid number. And so Meta Platforms continues to expect operating losses for Reality Labs to increase meaningfully year over year. So is it that? So that it's back, we're back to that narrative again where Reality Labs is causing them to lose a bunch of money and people aren't happy with the money spent? Maybe. That wouldn't surprise me. All right, so durable goods. We actually had good numbers on durable goods today. So forecast for durable goods month over month was 2.2%, 2.5 consensus. We hit 2.6. That's good. Minus transportation and this is for March, 0.3% forecast. We got 0.2. Not a big deal. Durable goods ex defense was 2.3% instead of 1.2% forecast. So minus defense, it was actually pretty good. And non-defense goods orders ex air was 0.2 versus 0.1. So durable goods actually did all right. And again, I don't love month-over-month numbers because they're so hard to read. They only do so much. Yeah, Meta's down 10% roughly after hours. It's bouncing around. We'll see how things go here in a second. Once they get their slide deck out, I want to look at it. And then also that'll give time for visual stocks to update as well. And once all that data's updated and refreshed on there, we'll take a closer look. Now, again, you can see this just downward path that we've had in durable goods. It's kind of good. It looks almost like we're getting ready to maybe break higher on it. There's kind of a megaphone pattern. So we would like to see this go up for sure. But today was kind of a nothing burger when it came to economic data. Nothing too notable. And the CME Fed Watch tool still has us in July at about, a 45% chance of lowering rates. So it's still a pretty good likelihood. It's only like 20%, not even in June. So we didn't really see much of a change there either. Real quickly in the crypto markets, I think I'm down like 10,000 in this my main shitcoin portfolio. So that retraced a little bit. I think, hey, thank you for joining, Ethan. Appreciate it, man. Hopefully you get your $3 worth, bro. And then also looking at the heat map, you can see how the crypto world got hit pretty good today. Bitcoin down 3.69%, Solana down 3.32%, Ethereum down 2.73%. Pretty consistent drop across the market. But if you look at the weekly time frame, it doesn't look that bad at all, really. And then fear and greed index, we're still well in the fear range. Haven't really changed much since yesterday. And if we look at the timeline for it, and this is just for stocks. Hey, BT, what's up, man? And this is just for stocks, but you can see we got a little bounce, and now we're just kind of chopping, and we're sitting in this range. And after today's retracement, maybe we fall a little bit. And I'll look to see if the slide deck's open here for Meta in a second. But I did want to point out a few things with Bitcoin related and just some other economic things. So this shows the transactions for Bitcoin after the halving. Meta's numbers are up. All right, I'll take a look. I'll pull it up just in 1 second. And what I wanted to point out here is since the halving, this line in the middle, you can see where where the number of transactions, or I should say the breadth of the transaction activity and network activity increased a lot. And the amount getting paid in fees is huge. If you look over here, there's a good metric that was on this too. It says, furthermore, pre-halving transactions fees accounted for 11.79% of total rewards. Post-halving transaction fees have accounted for 124% of rewards. So this is actually offsetting a ton of loss right now for the miners in regard to the halving rewards, which I think is very interesting. But we'll come back to some of the macro stuff maybe in a little bit here. Let's see if we can actually get the results. Or the slide deck is what I'd hope to get. We can walk through the line items, but it's just not as much fun. Yeah, I'm going to wait for the slide deck. I want to see the slide deck. We'll be up in 15 minutes. Yeah, let's just wait for him. I like the visuals better, guys. I don't like to dig around and look at fucking line items. I did that shit for a long time, and it's just boring. It's boring for viewers. It's boring for me. I'd rather just wait a couple of minutes and get the visuals and be able to talk more intelligently to it. Now, so transaction fee wise with Bitcoin, things are looking really good, really good. Something else, I want to point out a few things real quick. So Robinhood, I don't know if you guys saw this, but it said they posted this just yesterday, I think it was. Earlier this month, we crossed a new Robinhood milestone, 1 million signups for Robinhood's gold card wait list. Claim your spot to get one today. I don't even know if I'm getting my gold card. I haven't heard back. I keep telling Amit, you got to get a hold of Vlad and have a conversation with him about my gold card. Turns out he does not give a shit about me. So hopefully I get it, but no one cares really, right? Outside of me. Fundstrat, S&P, and QQQ have rallied sufficiently to think that the short term, and this is my friend Seth posting this, he's got a lot of great like macro related, market related, like quant type data and analytics. And then this one he's getting from Fundstrat and Tom Lee, but it says that a short term low should be in place. While this move might not prove to be a straight shot, higher prices are likely into May just by the sheer, range of the bounce. And I 100% agree with this. I think that this is exactly what's happening. Meta right now still down 10.28%. Not having a good day on Meta. Also, my friend Crossroads had a really great write-up about PayPal. I highly recommend reading it. It was really good. He expects a triple beat, but he goes into a ton of detail on what he's expecting for everything. Seasonality, margins, OpEx, revenues. Like it's a lot of detail. This is the kind of stuff I don't like doing anymore. So I'm happy Crossroads is doing it. And I don't know, might do a live stream with Crossroads and Future Invest in regard to PayPal like we did last earnings call. We'll see. I'll leave it to those guys. Otherwise, I will be doing one. On the Bitcoin segment here real quick, I wanted to make sure you guys got this. So I know, poor Jesse, I want the actual gold card, and I don't have the actual gold card. It's a sad day, guys. Smallest violin ever, right? Anyway, Gali Sama posted this, and I thought it was great. It says Hong Kong Bitcoin ETFs are going live. GBTC's outflows likely to slow down. Bitcoin miners hodling versus production at its highest, and Bitcoin chart coiling up to go higher. Hey, thanks, Robertus. Welcome, man. I think you'll get your $3 worth. If you guys don't know, if you're on iOS and you want to join, make sure you do request desktop if you're on the phone. Otherwise, go to a desktop computer and do it. They don't like YouTube and people trying to join channels for some reason. So the iOS, suppresses it. It's really weird. I don't know why. Also, there's something else I wanted to show. Where is it here? Maybe that. Let's see. On Friday, more money went into Bitcoin ETFs. That was good. On Friday, we had that. I haven't looked at inflows since. There's another one I had. Gosh. I'll see if I can find it. Let me see here real quick. Did I have any other U.S. economic data? Yes, I had one more. This is the Kobayashi letter. It said, this is concerning. It talks about U.S. Federal debt, and now it makes up a record 12% of government spending. It is concerning. I showed a good chart of this just the other day. Medium, small violin. Yeah, there you go. That's fair. So it is concerning, right? And this is why the Fed has to lower rates. So everybody that keeps telling you that rates aren't going to be coming down, I think they come down by July at the latest. I did think they were coming down in March. Arguably, they have not. I should say arguably, they have not. And I was wrong, and that happens. But here's the thing: the government, we're now Medicare, Medicaid, and defense are all lower items on the government spend than the interest, and that is not sustainable. That number went from about 360 billion a year to over 900 billion since the pandemic. It is very, very dangerous, and it can't keep going up at that rate. And rates have to come down just for the government, not to mention every other reason why they should come down. All right, let me go back over here. We might go through the line items real quickly. Let me see here. How are we doing on... still just kind of meandering on Meta. I'll see if the slides are coming. Jesse, Google doesn't wish to share the 30%. It's about avoiding profit sharing. I know they keep a decent chunk of the YouTube revenue. I'll tell you that much. Oh, hey, we did get it. We got slides. We got slides. Let's jump in here to Meta. Let's get into Meta. I'm going to turn this off real quick. I got my dark mode on because I can't stand the light, which is weird because I got a bunch of cameras on me right now. And light. But let's go through the slides. This is the more fun part, and then we should have visual stocks updated after that. All right, advertising revenue by geography. It looks like Q1, U.S. and Canada shrank a little bit. That was probably the bulk of the shrinkage. We also saw a reduction in Europe. Asia remained strong, actually went up just a bit, and then the rest of the world went up. So that's actually interesting to me. That's kind of the opposite of what I would have thought. I would have thought maybe, a reduction in Europe, but I wouldn't have thought it in the U.S. Interesting. We'll have to see if that trends. I also want to know with Google if that's kind of what they end up experiencing too, right? Now, revenue by user by geography. Okay, what was the first one? Advertising revenue by geography, and this is revenue, so this is total revenue. Again, reduction in the U.S. and then a little bit in Europe, and kind of the similar setup. Makes sense for the rest of the world here. Segment results. This is kind of like everything else. Advertising, other. I wonder what other is. Is other like including their, headset and all that stuff? I'm new to these guys I should say I haven't really looked at their financials in about a year and a half since I made $250,000 off of them. So I got to get adjusted to Meta. And I didn't really follow them much before. I just knew that they were a really good value in the 80s. And so I went long on calls, made a shit ton of money. But so I got to get used to their financial statements. If there's stuff I'm missing too, guys, definitely throw it out there and let me know. So total. Oh yeah, Reality Labs. They do have a separate line. Cool. So family of apps revenue, 36. That was a reduction, and Reality Labs revenue dropped a lot versus Q4. There must be some seasonality there. They must have done a big push, maybe in advertising. Maybe it was the release. No, because the headset was out for a while. That's interesting. Okay. Big drop, though, in Reality Labs. I mean, it's only so much percentage-wise versus advertising. Advertising's way more. Let's see. Total income from operations and operating margin also took a decent dive. Operating margins at 38%. So, again, kind of a dippy quarter. We'll have to look at what guidance looks like, too. Expenses as a percentage of revenue. That's not too bad. That maintained. So it looks like it's scaling all right with revenue. Effective tax rate, 13% versus 17%, so they'll get some benefit from the drop. Net income, 12. You gotta love it. You still gotta love how much cash these guys have. I'm not a huge fan of like Facebook. Wow, they're down almost 13% now. Woof. But yeah, that sucks. But we'll have to look at all the guidance and all this stuff. They got a lot of slides here. We'll have to roll through the rest here. But net income, you still have to love that they have $12.3 billion that they're netting for a quarter. I mean, look at that compared to previous quarters in 2022. And even going back historically, we'll look at some more of that in a second here. That is down 13%. Year over year is pretty good. I like year over year for charting of everything. It's just way more insightful. Month over month sucks, man. Diluted earnings per share, 4.71. We're just seeing kind of the same level of dip across everything. Capital expenditures, they're lower. Quarter dropped a little bit, year over year. Decent amount. You got to remember they laid off a ton of people. They're still a leaner company. Family daily active people. I don't even use Facebook anymore. I used to all the time, but after I hating Facebook groups, now they're over down 13% again and dropping. Hey, that's awesome, Gorgo. I hope you made a lot of money off of it. They went up a lot. Tomorrow's gonna suck. I'm sorry. Yeah, that blows, man. It's hard. They had really high performance previously, like raising guidance, I think by 20%, and then yeah. So I mean, it's just one of those things where it happens. Family daily active people. So it's ticking up. It says. I really do wonder how we gauge these metrics. I know so many people that don't even use Facebook anymore. It must be some of their other apps that are still doing well. But again, I think they had to take WhatsApp off the store in China. I don't know what the utilization is there. I'm gonna have to look that up and figure it out. But so that could be impactful going forward too. Family average revenue per person (ARPP) looks like that's going down. So they're losing some of that. But again, ads are going down. Ad impressions delivered year over year percentage change. Huh? They're delivering less ads in Europe, at least. Worldwide, it's about the same. US and Canada, about the same. So less ads in Asia Pacific and Europe, especially Europe. Yeah, sorry you're getting slammed here, Gorgo. It was banned there. Yeah, in China. Yeah, yeah. I think they forced Apple to remove it from the store, right? WhatsApp. So that's the kind of stuff that can hurt Meta. I don't know how much it matters with them though, so I really do have to dig that up and figure it out. Average price per ad year over year percentage change. Huh. Okay, that's cool. That's not a bad metric. Average price per ad. Is that how much it costs them? Do you guys know this metric really well? I might have to research this one and understand it better. Or is this how much they're charging? I'm assuming it's how much they're charging. It's got to be. Free cash flow reconciliation. Q1 19.24 billion. So they didn't really have much of a drop in free cash flow. Less in net cash provided by operating activities. Free cash flow actually did go up. Let's see, less purchase property and equipment net. So they did less purchasing of property and equipment, a decent amount, and that seemed to help them too. And then less. Oh, I'm sorry, subtracting these principal payments on finance and leases. So even after these things, they had a good quarter on free cash flow. Yeah, yeah, the only thing I worry about, the TikTok bill, the only thing I worry about is the potential loss of freedom in social media in the future and our government's ability to be able to censor us. I am all for getting rid of TikTok. And I think it would actually drastically help like X, Facebook, all these companies. And I don't think that TikTok is necessarily a positive thing for humanity. Hey, Andres, thank you for joining, man. Really appreciate you. Everybody that joins, appreciate it. If you guys could like to, again, it really helps the channel. But yeah, so I don't know. I don't like TikTok, but I also don't want to give the government the ability to be able to censor people. And that applies if you're on the right or the left. Both sides are fucking crazy anymore on the extreme ends. And so I would worry about anything happening. So I want TikTok gone, but I also just don't want to see the world fall apart, if you know what I mean. Liam Dillon, the X platform is going to troll the shit out of Meta after this. Probably. Gorgo, Bitcoin is taking a good dip right now, 63.7. We finally got a bit of a dip post halving. We should resume up soon. Let's take a look at Bitcoin real quick. We got some time, right? We don't have the call for a little bit. I think we went through a lot of the rest of this. Let's start pulling up some tickers, man. See what we got. Do I have my regular ticker? Yeah, there we go. Let's do this. We'll start over here. All right, so Tesla real quick, after hours, 0.786. Meta recovering a little bit, only down 11.61. I got to say this real quick. We are just getting started on Tesla's pop. We have kind of this doji right here. Maybe we see downward pressure down to this new gap that we just created, a massive one. I don't think we have to fill it, though, so it does not have to happen. But if you look here, guys, this is a downward trend that we tried to go over, couldn't do it back in April here, and then we went over it again today and couldn't quite do it, stayed underneath. But now we're under this previous support line that went back a ways. I mean, it's back to really August of 2023, and we've got this really steep decline line, and we want to break above it. So we should see some violence to the upside, and I think that a number to 175 might even be a good place to take a little bit in profit. But I think because we'll hit the 50 moving average, but I think that that's very likely. You said you loved me once, so I say it 2x. I love you. Love you too, Toke. All right. Yes, Gorgo. Good rhyme to buy, or good time to buy BTC or MicroStrategy. Possibly the last chance. Yeah, I would totally buy. JJA the Savage. 100% agree on the TikTok thing. It's like modern day prohibition. Sure, alcohol isn't great. Yeah, I think we need to do. Here's the thing. I'm actually okay if we did something that is grafted around the potential of a threat from foreign influence on social media platforms, like foreign control of social media platforms. I would be more for something like that than something that could allow them to control the social media platforms that are US based, like truly US based, right? And that don't necessarily have that. It's a slippery slope, man. It's hard. It's hard. So I don't want the Chinese government directly influencing what we see and think. And we know that they use TikTok to track people, track journalists. We know that from a few years ago. They were tracking journalists, and it's just like it's scary shit when the Chinese government's trying to control our futures. And so I don't love it from that front. But yeah, I digress. Let's move on. Bitcoin. Let's pull up Bitcoin. I'm glad to hear it's dropping. We'll probably do Bitcoin. We'll kind of make this a multi-stream again. Yesterday, I just couldn't help but stay focused on Tesla the whole time because it was so beautiful. So I'm sorry about yesterday for anybody who wanted a market recap, but I couldn't help it, man. It was just glorious. Now, Tesla, or I'm sorry, Bitcoin. I just want to say this still looks super bullish to me, guys. This still looks super bullish. These wicks up are so powerful on all these candles, And so I'd be surprised if we closed down too far on the weekly time frame. This is the weekly candle. I'd be surprised if we closed down too far on this thing. And I think that the direction is still up. So I probably will. Again, if we get to like 175 in short order on Tesla, I'd probably sell a little bit of my calls, a small amount, nothing crazy. And I would probably dollar in to Bitcoin and start doing more of that. I agree. MicroStrategy, no brainer at this level. Derek, think Tesla will have or had a short squeeze. It hasn't even started. So I pay like a lot of money for Ortex, and it is a platform that allows you to be able to see short interest in real time. So it's pretty cool. And I can tell you that the live short interest on this, it's barely changed, guys. It's barely changed. If we go over here, you can see kind of like all the different indicators. You can see that short interest is up over the last 3 months. I'll go to the 18 because I think that's a little healthier to look at. It gives you a larger time frame. You can see how short interest really climbed from like February up. And I think I can do a wider view of this. I don't know if I zoom in. What does it do? Yeah, there we go. So you can see it's kind of like too wide now, but you can see how short interest started going up. And it was actually, if you look over here, it was at the highest level it's been in at least 18 months, and it's still high. The squeeze has not happened yet. If we look at live short interest, and let me dial this down a little bit. That's a little better, a little healthier. Live short interest today is still high. It has not went anywhere. Yesterday, today, so short interest on Tesla is actually higher than it was. The cost to buy is comparable. But there was probably a washout of some, but they're jumping back into the trade again. So these guys think they're smart and they think that they should put more money towards this. And I don't think that that's a good idea. And I don't think it's going to work well for them. And I'm still learning. I think Ortex is going to give me somebody that will work with me to show me kind of the highlights of their platform. It sounds like Macro Micro is going to do that too. They reached out to me directly on X. And so I'm going to be looking at these platforms and probably learning a lot from these guys about what they specialize in and how I should be using them. So hopefully I get really good and provide you guys a ton of value that you won't see at other places here in the not too distant future. Let me get back over to Bitcoin though. Let me see. I think Tesla tracking is of secondary importance. JP Stowe, the law is about data held for foreign countries which are considered adversaries. That's good if it only if it's tight and it doesn't allow government control of what's happening here. That is my only fear, man. I don't want to live in that kind of state. Brazil is dealing with that shit right now. We don't need it. Silas, Tesla can roast the shorts even harder. I don't even think they've started yet. The shorts think that they can hold on. We can roast them to a crisp. I agree. I think the narrative's really going to become powerful, especially heading towards 8.8. And 8.8 might be a sell the news event for a period of time because it doesn't have enough oomph. But you got to remember, Tesla said that they could have some of these new vehicles this year. This year. So and they showed the app. So I'm gonna be able to do ride hailing. I'm gonna do that in my Cybertruck just for the fuck of it. I'm gonna drive people around. Maybe I'll do some market recaps. Let the car drive me around if it gets good enough here soon. And I'll be doing ride hailing and showing you guys can see what FSD is like at the same time I'm pulling up charts. We'll figure it out. All right, so let's get through some more. Let me shrink this just a hair. Let's get through some more tickers in regard to all of our favorite things before we get to earnings here with Meta. Derek needs shorts to get him scared. Any and everything. Hey Jesse, I appreciate your knowledge, experience, and skills, but your transparency and no nonsense even more. You have helping heart and a natural motivator. Hey man, I appreciate that. I do try to be all those things. It's not always easy to be transparent when you're losing shit tons of money. I find that to be a tough time. So when you're doing bad, like when I made 700% at the end of last year, people were loving me. And then when you go down for a few months, and especially with the PayPal calls that have been beat up a lot, mine are down like 33% or 35. It's like some people waver, you know what I mean? So it's always interesting. MicroStrategy isn't really dropping in after hours. It looks like it front ran a lot of this. Krish Cashman, thank you for joining. Yeah, so that's cool. So they're down about 6% on the day. I love that. If we get a retest to like 1200, dude, I might actually start buying some more of that with my Tesla. I'm not going to lie. It's great making money because that Tesla, I'm still going to make a lot of money off of in the future. I'm not worried about it. I won't sell it quickly though. But I could definitely enjoy nibbling on some shit. Nothing makes you feel better, guys, than making a bunch of money on one thing and then just carving off a little bit and nibbling on other stuff that you love and that you know you're going to make a ton of money on. Nothing feels better. All right, after hours, CleanSpark's getting hit. I think a lot of these miners are probably getting hit. If we take a look, let's pull this up real quick. We'll go to the miner. I need to update these too to get better. But I'm just going to look here at a broad view real quick. So TeraWulf got hit the hardest, 7%. HUT got hit 6.75. HUT is just a disaster of a stock. IREN down almost 6. MicroStrategy down 5.45. CleanSpark coming in next. Looks like the real winners today, Riot up 0.25%. And then Ethy didn't do too bad, and Mara didn't do too bad. I told you, money rotates, and so Mara's been pretty beat up, so it doesn't surprise me at all that they're kind of recovering. Meta is down about 12.8% again, so again, just having a tough day. So yeah, CleanSpark, if CleanSpark kept falling down to the .618, I would totally get it. CleanSpark actually hasn't tested that and found support yet. Every time it goes back, it falls underneath and finds resistance. So it really does, it doesn't need to, but it might. So I don't know. Again, we're getting to a point where it's like, I just want to keep adding to Bitcoin related investments. I'm not taking anything away, guys, nothing at all. But you just maybe be mentally prepared for 18 and maybe dipping into the 17s because we've never actually found support. And it would be nice to find support under all the moving averages and under the .618 retracement zone, which again is the big one. It's the one you're most likely to retrace at. It would be nice to break or get to that for the first time and then go back up. And maybe the other miners are looking that way too. Let me just take a look at a few. I'll pull up Mara, or actually I'll do Cypher. I'll pull up the ones I have, and then I'll pull up a few other miners, and then I'll go to my usual ticker symbols, guys. And if we get time here still, I'm going to try and move a little bit faster today since we got the earnings call. Going to try and fit it all in. Want to get the market recap as much as I can. I might do a Saturday stream. I don't know. I'll post a vote maybe later for people that want to do tickers and I might do like a Saturday stream for that, and then do my Sunday stream for what's coming for the market on Monday and any news that's related to macro, and maybe a little bit of market recap ish stuff in regard to ticker symbols too. But yeah, looking at Cypher, Cypher didn't do too bad, down 3.53%. And if we look at the daily on this one, I'll try and get caught up with chat in a second. We still don't, yeah, same kind of pattern. Never really found support on the previous fib. So I don't know. If Bitcoin does remain weak a little bit, or does try and test down, if you look over here, you could see where Bitcoin could, again, for like the umpteenth time, like arguably fourth time, it could test down maybe towards the 59.60 range before bouncing and closing the week up here. So maybe this is an opportunity, guys, for you to be able to buy some more of this. If you guys made a ton of money off of Matterport, if you made a ton of money off of Tesla this week and continue to make some money off of Tesla, maybe our opportunity next is getting more in these miners and more in MicroStrategy. I would love that. I would really like to get set up for the cycle. We're getting ready for that next big ramp. That would be just a good time. I'm really starting to think that it would be healthy to back test here. We don't have to, but all right, I'm going to pull up Mara. That's probably the last one here for miners, and then I'm going to jump into all the other stuff that I normally look at, all the fintechs, ArcG, all that kind of stuff. So Mara down 1.8%, down 1.31 after hours. It looks like it wants to test the 200 moving average. I would be surprised if it doesn't find that as a stronger level of support. Maybe it could test down to 15 if everything gets really dragged down. But this stock has been so brutalized. I don't know. I could see it trying to go higher. We'll see. We'll see. I don't love it. I mean, I don't even own the stock, right? All right, let me see. I'm going to catch up with some chat again. Do you hold any dividend stocks? No, I don't really care about dividends. Let me see here. Oh, I got Lisa Marie. I missed a few of you guys. Lisa Marie, love it. Seedless, chard, and Lacento kale. Can he nicely grilled into crisp? Delicious. What are we talking about? Annie or any and everything. Agree, but you do it. Keep it up, man. BT ArcG, what's the thinking behind this play? It's a play where they have over like 40 investments across the genomic space, and if one of them takes off, then I would make a shit ton of money, like more than 10x, 10 to 20x or something like that. And if or if just the economy does okay and markets turn more risk on, I would probably make 10x. So it's just an asymmetric bet. Like if I have $150,000 in something and I can turn it into 1.5 million, and I've got a bunch of different asymmetric bets, and if 33% of them turn out well, I've made a bunch of money for the year. And if half of them turn out well, I've made a stupid amount for the year. And if all of them turn out well, it's just retarded. Can I say that anymore? I don't know. I just did. All right. So again, Mara maybe finds a bounce in here. Let's move on to other stuff. Let's look at PayPal. I was very happy to see the strength today. I think PayPal is gonna blow some minds. We're gonna be doing a lot of earnings, guys, and I'll try and keep the market recaps going too. But we will be doing a lot of earnings calls here soon. It looks like that hasn't moved yet. All right, let me look here. So again, here's what I love about PayPal. There's a bunch of things. I mean, they were like a woke mess, but now they got Alex Chris. He's a better CEO outside of some comments he made a little prematurely about the company and its success coming, shocking the world, all that stuff. But here's what I do love. So we had this time right here. This is a really good chart, guys. This is really good. So we had this downward resistance line, very strong, very clear, right? And for the first time, we broke above it. Then we failed, right? Came back underneath. You don't love to see that. Over here, we broke above it again, established on a weekly, almost above another weekly timeline, broke down, hit the 50, the 100, and the 200, all of which want to push us higher. And we bounced perfectly off the previous resistance line that has now been turned into support. We're above peak volumes across the entirety of the company going back to their existence. Like when we look at these volumes, guys, like it's all underneath of us. We have a really clean run into the 70s. We could see resistance there. I might even sell some of my January 2025s in this region. I still think that there's a possibility, though, that we can get up into the hundreds. I probably won't sell all of it, but maybe I'll sell some just to reduce my potential for loss, and just and if anything, maybe move it into my January 2026s, because I do believe that this company can still have a really strong asymmetric bet. But we'll see it as it comes. But I like this price action. I think that this is super healthy. I certainly don't hate it, and this company just keeps printing money. Now, let's go to Hood, see what they did today. Let me read some comments here too. Miners showed more relative strength today, as did PayPal compared to the market and underlying. I agree, LSG. Chris Cashman, hey Jesse, yesterday's Tesla video was the absolute best ever. I'm watching it over and over again. Thanks, man. I appreciate that. Helps my ad revenue. Even though I learned that you can't let the audio play on the earnings calls, or you get copyrighted right away, and then I've got to share revenue with the dipshits that made these horrible fucking songs they subject you to. So today I will not be playing that until I know the earnings call started, and then I will end it very quickly at the end. So I didn't get anything from that. Anyway, let's see here. What's your Tesla price target by end of year? By end of year is tough. I don't know off the top of my head. I think it could do. It could get up near the 300s maybe. Like, that's possible. That's possible if things go well, if they execute, if margins start increasing, if the narrative becomes better. It's also possible that maybe it tops out in the mid 200s or low 200s. So we'll see. But I do think that could happen this year, and I think it could be a new all-time high within 2 years. Oh, let me see here. What else we got? Dan Blake, thanks for all you do, Jesse. Do you think FASB reporting will send MicroStrategy shooting up some report of huge earnings? Yes, I think that will offset and help them a lot, because you guys have to remember, Q1 earnings are going to be good for the miners. They're going to be good for MicroStrategy, okay? And especially MicroStrategy, because they hold so much Bitcoin. But companies like Mara too, like the second biggest holder, at least out of some of these publicly traded ones, they'll do really well as well, because they have FASB accounting rules that are going to be pushing their profits really high, because Bitcoin actually got to 71,000 and change by the end of the quarter. So that is no number to scoff at. And so they're going to have just wicked earnings. They're going to have really wicked earnings. Sorry, I got acid reflux. Got to eat one of these here. All right. Tech YYZ. What is your thoughts on shorting some of the miner company like Mara and Riot? I would not short any of those. They'll fucking rip your face off. No, dude. All of the stuff will rise, even the shitty ones. And I don't actually think, yeah, they'll rip your face off. Don't touch it. Yeah, don't touch them. All the miners. The worst ones will do the best over the shortest period of time. So you'll really get fucked. I wouldn't short anything Bitcoin related. Darcy, would you invest in CleanSpark or Tesla options if you couldn't do both? I would not touch options on anything Bitcoin related right now. I just wouldn't. They're not worth it. They suck. Watch my Options 101 video. It tells you how to evaluate options and the returns on them. And if the returns aren't at least a 3x, what the fuck? How did I do that? Cool. Balloons, random. If the turns aren't at least 3x the underlying asset, like you're going to get 300%, then 200%, I wouldn't touch them, because it's just not worth the risk to reward. And some of these miners, like, you're not even doubling your money if you get the options. And if you don't go well past the target, the options expire worthless. So why do that to yourself? I don't think they're worth it. Tesla was great. If Tesla retraces, buy the fuck out of those, in my opinion, as a non-financial advisor. But just some guy in his basement, a high school dropout who you guys are listening to for financial advice. But yeah, that's my take. Gorgo, Meta has an ugly gap between 406 and 405. Yeah, dude, Meta is just continuing to bounce in that 12 to 13% down range. Rough day for them. Mark LeBlanc, yes, sir. Kumar Giodi, what's your Tesla price target by end of year? I kind of said that. I think it could hit the 300 range. C-list. Greening vegetables, Jesse. Brushes with garlic, lemon juice, and soy sauce and olive oil. Big yummy. I don't know what you guys are talking about, but it sounds delicious. Ethan Batuk, laughing. BT, thanks, man. I must have missed some comments. Camus, hey Jesse, could you look at? Okay, so we got some stock requests in here. Let me get back over to this. So Hood got hit again. We're underneath the fib. We couldn't get over it, so that kind of sucks, right? We wanted to get above that. We're underneath of it, but on the daily we did at least hold for a day, right? But I won't lie to you. The 50 being like this and grinding right above it, it looks like a bear flag and like it's going to go lower. So maybe we get like a day or two where some broader markets might take a little bit of a hit, especially with Meta earnings sucking so bad today. I'm accidentally the funniest person. Accidentally, deliberately, whatever. What does it matter? Yeah, so we could go lower. We could go lower. You got to realize that. And it wouldn't be crazy for us to. We had a really great run in Hood, guys. There's a reason I sold all my call options after making 500-600%. Yeah, I forgot about that. I had another win this year, 500-600% on call options for Hood, right? So I had Matterport, I had call options on Hood, and then more recently here, Tesla starting to go up. So it's been an all right year. I'm still down. I'm down like 10%, I think, maybe a little bit more, might be 15 for the year. So not my best. I'd rather have that 700% number I had, last year, but whatever. Shit happens. You got to deal with it. I need to do a maximize. I gotta update my Stream Deck here to make it a little bit cooler. But here's what I wanted to show you guys. You could get a drop. If broader markets start to drop, you could go into the 16s, I think, pretty easy. Maybe find support there. If it can't, we could still go down to the .786. That's why I haven't been buying any Hood. That's why I sold out of all my options. And again, it's just there's a little bit of risk still there, even though I do think that they're going to have a great quarter. So when the quarter reports, I think that is the flip around moment, honestly. All right, let's see. SoFi earnings coming next Monday, I want to say. That should be fun. C-list, Jesse, get Alka-Seltzer, Gold, no aspirin, those Tums, slow. Yeah, I don't do Tums anymore. I actually have just like a heartburn and gas chew. It's not like Tums. It doesn't act like that. And I'm trying to do a bunch of stuff naturally too. I just had a few drinks last night, celebrating with some of my crypto friends, and doesn't treat me well. I'm too old for that shit. All right, SoFi up 0.26% during the day and down 0.79% afterwards. I think SoFi is becoming a stable coin. It is so. It does not want to go down anymore. I don't think it could go down anymore. Website traffic is looking good for SoFi at some of the highest levels they've ever seen. So I think, again, this one's ready to launch. I still think the $12 are imminent. And I'm going to hold on to that. And I think that's like a 50% from here. So you can't hate that level, 54%. So I think I'm still going to make money off my SoFis. And if we get near that 12, I'm probably going to liquidate all my 2025s and just convert into stock. All right. Let's see what else we got here for comments. BT, rub some dirt on your acid reflux. Be a man. I'll try. Chris Federal, Wayne's World all grown up version referring to you in your basement. Head and shoulders drop comment. Most probably won't get this, lol. That's funny. Yeah, no, I think I do. BD, sorry if I missed this, but if is Matterport play dead since buyout? I don't know enough about the new company, and I just don't care to do the research. Any company that jumps 200% and that's getting bought out, I will let the dust settle before I try and figure out what to do from there, personally. So I'm out, and I probably won't be pulling it up anymore unless I find an enticing reason to. Kumar, Jesse, are you open to having a Discord channel for all of us? I don't know. I'll probably take a poll in the near future. Here's the thing. I'm not going to charge for it. I'll give it to everybody that is a member on YouTube. I don't know how I'll figure that out. I'll have to figure that out somehow. Maybe there's a list or something I can derive with. I don't know. I'll try and figure it out. But I don't want to charge for it. So I will give it to people if it provides value, but I don't want anything that's just going to be noise, and I don't want to charge you for anything else. I think that's bullshit when people charge in like 5 different platforms. That's not my style. So maybe I'll do a poll in the future here though, and figure out if that's something people want to do. And then it'll be a trial though, because if I don't find it valuable, or I don't think people are getting enough benefit from it, and it's just overhead, then we'll just kill it. Lisa Marie, then we'll get my Hood at $14 from puts. Yeah, I hope you do well. Bliss L. Hey, can you check out? All right, I'll do that part in a little bit. C-list, those chews are all the same. They slow gastric. This one does not, actually. It doesn't slow down gastric. The Manjaro I was taking for weight loss slows down gastric processing, and that sucks. But this one is a little bit better. But you're right. Ideally, you get away from all that stuff. And I've done a bunch of research and learned a lot, and there's things I'm doing to help it. So, but I do appreciate it. Appreciate you guys looking out for me. BD, thanks, Jesse. My thoughts exactly on Matterport. BD, if you need help managing Discord, would be happy to volunteer. I probably would. I wouldn't want to manage it. I'd be happy to be a part of it and have it be something where we can communicate, like especially really well with data and things that have happened. But I don't want to have to manage it. Kumar Giodi, I can help if you want. Hey, you guys are awesome. All right, we'll figure it out. C-list. By contrast, magnesium is better in stomach meds. Yeah, I think that's a lot of what this is. Daryl Farrell, anyone check on Jeremy? This ain't no joke. Oh, he owns a lot of Meta, doesn't he? Yeah, that fucking sucks. At least I don't think he's in options anymore, so that's probably good. And he's had a pretty decent year. He held on to Meta a long ways. He's up a lot. He held on to it longer than I did. You know what's funny, though? I made, yeah, I already have gastroparesis. Yeah, I know that. I learned that the hard way. Thank you, though. But yeah, so the funny thing about Meta and Jeremy is I made about 500 or something percent off of my investment. That's probably what he's made. The difference is I made it in 3 months and then I got the fuck out. Yeah, he did. But then he had to write it up the slow way. I wrote it up the fast way. Alka-Seltzer Gold makes bubbly water and gives you potassium. Huh, all right, I'll check it out, man. I will check it out. Anything that can help, I am all about. I definitely don't want to travel down the world of taking medications my whole life, and because some of the doctor stuff is bullshit. All right, real quick, I'm going to pull up Square. Also, ASIN, lots of insider buying. ASAN, okay. Square down 1.57%, down 0.7% after hours. Again, I think we're in a pretty good place for this one. There's a lot of volume underneath of us. It would be great if we could establish above the $75 range. That would be most ideal. I do want to look at NVIDIA real quick too. And then maybe if we have time, I'm going to start pulling up your guys' things before this earnings call. Yeah, we should. So I'll try and rock through your guys' list. I can't believe we're actually accomplishing kind of the whole market recap and Meta earnings. That's pretty cool. So not doing too bad. This does not look bad technically. I think we're still okay. There could be more downside. We really could go to like the 733 range before we start to get, to the bottom of the daily on the RSI. Maybe even lower than that. Like maybe we could get to the 700 range. But if we got to that, that would just be a beautiful buy point on NVIDIA. I'll probably pick up more if that happens, honestly. Did you ever try Metamucil? No, I don't think I did. You guys, you're all diagnosing me. I love you guys. You're like, don't let him die. You guys are great. All right, so we're going to look at ticker symbols down. I'm going to do your guys' requests, and then earnings calls should come up in a second here, and we'll go from there. Hey, Jesse, Dan says, hey, Jesse, my Tesla Leaps are looking very good, but sadly, I can't average my cost basis down anymore after today's pump. Would you average up? I would never average up. I just never do that, especially with options, because you're adding a multiplier to your downside risk. So I'll be stacking too on NVIDIA if it gets to 700 for sure. But yeah, so I would let it drop. We've got a big gap underneath of us on Tesla, guys. If it fills, like let's just look at it here. If for some stupid reason we close it, that would be the most ideal. 147 would be a wicked bottom. If we close that, then you start buying, or if we get close, or if we get in this gap zone, then you start buying. But I would buy on down days because it's a multiplier. So those could do 2 to 3x really easily versus the underlying. On a high vol day, they can do 3x moves. So if you're buying it on an up day, you're paying way more for it than you should. But if you're buying it on a down day, you're doing the exact opposite, right? So definitely think about that stuff. BT's laughing at Metamucil, and C-List is saying, okay, now I'll talk about stocks, not grilled kale and stomach acid meds. I'm actually doing, so one of the things that I have is cabbage. I have cabbage and bacon, and it's really great. It causes no pain for my stomach, and it's probably got some of those same benefits too. So there are things I'm trying to do. I'm really trying to focus on my health, I promise. Am I frozen? Can you guys see? Am I frozen? I've switched to new internet. I hope not. If I'm not frozen, can you guys say something? What does it show here for the... It says strong connection. Can somebody please confirm if I am frozen? Anybody? No, I'm not frozen? Okay, good. Was I frozen at all? Did I do this stream at... I gotta check. Stream latency. Oh, I have you guys at normal. I'm sorry. Okay. My streams going forward, I'm probably going to do ultra low latency, which will make it to where we can chat a lot better. So it'll be more real time instead of delayed. Right now it's super delayed. So going forward, I'll try and get you guys at ultra low, and it'll be like we're having a real time conversation. It'll be a lot better. All right, I'll move on here. Constantino Lima, hey Jesse, wondering if you can take a look at EBS. It's beat up from the feet up. They make Narcan spray. Well, hey man, that must go over really good in Oregon and like the whole Seattle scene and parts of LA and most of California. They've got to love that, I'm sure, that Narcan spray. Let's see, EBS. This is almost betting on the world getting worse, I feel like. Let me see. Is it, let me go over here. I'll pull it up. They've probably been making bank, though. That's my guess. EBS, was that it? I almost wouldn't buy this stock, though. I don't know that I want them to do well. Right? I don't know. Let me get over here. But you got me intrigued because it's just such a weird... Emergent Biosolutions. Narcan, if I'm right, is the thing you take to keep people from dying of drug overdoses. Can you guys confirm that? This is really down. Maybe the pandemic stopping made it worse. They closed down their autonomous zone. Maybe that didn't help. I'm going to move this over here for a second, take it off of Meta, and I want to see what this company does for financials real quick. All right, Emergent Biosolutions. Yeah, all right, so it's Narcan and shit. So I don't love that. I really don't love that. I would want this company to fail, preferably. I don't want people to be addicted to drugs and need something to keep them alive for an extra day. All right, but that's just my bias. Revenue's going up slightly, still a money loser, but forecasting making money potentially in the future. They've been buying their stock back a lot. Is this their primary source of revenue? Oh, the call starting? Does it start at 4? Oh, shit. Okay, call. Going to call. I'm going to unmute this here. 1 second.
Thank you. Good afternoon and welcome to Meta Platforms' first quarter 2024 earnings conference call. Joining me today to discuss our results are Mark Zuckerberg, CEO, and Susan Li, CFO. Before we get started, I would like to take this opportunity to remind you that our remarks today will include forward-looking statements. Actual results may differ materially from those contemplated by these forward-looking statements. Factors that could cause these results to differ materially are set forth in today's earnings press release and in our annual report on Form 10-K filed with the SEC. Any forward-looking statements that we make on this call are based on assumptions as of today, and we undertake no obligation to update these statements as a result of new information or future events. During this call, we will present both GAAP and certain non-GAAP financial measures. A reconciliation of GAAP to non-GAAP measures is included in today's earnings press release. The earnings press release and an accompanying investor presentation are available on our website at investor.fb.com. And now, I'd like to turn the call over to Mark.
All right, thanks, Ken. And hey, everyone, thanks for joining. It's been a good start to the year, both in terms of product momentum and business performance. We estimate that more than 3.2 billion people use at least one of our apps each day, and we're seeing healthy growth in the U.S. And I want to call out WhatsApp specifically, where the number of daily actives and message sends in the U.S. Keeps gaining momentum, and I think we're on a good path there. We've also made good progress on our AI and metaverse efforts, and that's where I'm going to focus most of my comments today. So let's start with AI. we are building a number of different AI services, from Meta AI, our AI assistant that you can ask any question across our apps and glasses, to creator AIs that help creators engage their communities and that fans can interact with, to business AIs that we think every business eventually on our platform will use to help customers buy things and get customer support, to internal coding and development AIs, to hardware like glasses for people to interact with AIs, and a lot more. Last week, we had the major release of our new version of Meta AI that is now powered by our latest model, Llama 3. And our goal with Meta AI is to build the world's leading AI service, both in quality and usage. The initial rollout of Meta AI is going well. Tens of millions of people have already tried it. The feedback is very positive, and when I first checked in with our teams, the majority of feedback we were getting was people asking us to release Meta AI for them wherever they are. So we've started launching Meta AI in some English-speaking countries, and we'll roll out in more languages and countries over the coming months. You all know our product development playbook by this point. We release an early version of a product to a limited audience to gather feedback and start improving it. And then once we think it's ready, then we make it available to more people. That early release was last fall. And with this release, we are now moving to that next growth phase of our playbook. We believe that Meta AI with Llama 3 is now the most intelligent AI assistant that you can freely use. And now that we have the superior quality product, we are making it easier for lots of people to use it within WhatsApp, Messenger, Instagram, and Facebook. Now, in addition to answering more complex queries, a few other notable and unique features from this release, Meta AI now creates animations from still images and now generates high-quality images so fast that it can create and update them as you are typing, which is pretty awesome. I've seen a lot of people commenting about that experience online and how they've never seen or experienced anything like it before. In terms of the core AI model and intelligence that's powering Meta AI, I'm very pleased with how Llama 3 has come together so far. The 8 billion and 70 billion parameter models that we released are best in class for their scale. The 400 plus billion parameter model that we're still training seems on track to be industry leading on several benchmarks. And I expect that our models are just going to improve further from open source contributions. Overall, I view the results our teams have achieved here as another key milestone in showing that we have the talent, data, and ability to scale infrastructure to build the world's leading AI models and services. And this leads me to believe that we should invest significantly more over the coming years to build even more advanced models and the largest scale AI services in the world. As we're scaling CapEx and energy expenses for AI, we'll continue focusing on operating the rest of our company efficiently, but realistically, even with shifting many of our existing resources to focus on AI, we'll still grow our investment envelope meaningfully before we make much revenue from some of these new products. I think it's worth calling that out, that we've historically seen a lot of volatility in our stock during this phase of our product playbook, where we're investing in scaling a new product but aren't yet monetizing it. We saw this with Reels, Stories, as Newsfeed transitioned to mobile, and more. And I also expect to see a multi-year investment cycle before we fully scaled Meta AI, business AIs, and more into the profitable services I expect as well. Historically, investing to build these new scaled experiences in our apps has been a very good long-term investment for us and for investors who have stuck with us. And the initial signs are quite positive here too. But building the leading AI will also be a larger undertaking than the other experiences we've added to our apps, and this is likely going to take several years. On the upside, once our new AI services reach scale, we have a strong track record of monetizing them effectively. There are several ways to build a massive business here, including scaling business messaging, introducing ads or paid content into AI interactions, and enabling people to pay to use bigger AI models and access more compute. And on top of those, AI is already helping us improve app engagement, which naturally leads to seeing more ads, and improving ads directly to deliver more value. So if the technology and products evolve in the way that we hope, each of those will unlock massive amounts of value for people and business for us over time. We're seeing good progress on some of these efforts already. Right now, about 30% of the posts on Facebook feed are delivered by our AI recommendation system. That's up 2x over the last couple of years. And for the first time ever, more than 50% of the content that people see on Instagram is now AI recommended. AI has also been a huge part of how we create value for advertisers by showing people more relevant ads. And if you look at our two end-to-end AI-powered tools, Advantage Plus Shopping and Advantage Plus App Campaigns, revenue flowing through those has more than doubled since last year. We're also going to continue to be very focused on efficiency as we scale Meta AI and other AI services. Some of this will come from improving how we train and run models. Some improvements will come from the open source community, and where improving cost efficiency is one of the main areas that I expect that open sourcing will help us improve, similar to what we saw with Open Compute. We'll also keep making progress on building more of our own silicon. Our Meta training.
Not sure if you guys can hear me right now. We're down 15% after hours right now for Meta.
Workloads
They're
on
fucking
this less
hating this.
expensive stack. And as this program matures over the coming years, we plan to expand this to more of our workloads as well. And of course, as we ramp these investments, we will also continue to carefully manage headcount and other expense growth throughout the company. Now, in addition to our work on AI, our other long-term focus is the metaverse. It's been interesting to see how these two themes have come together. This is clearest when you look at glasses. I used to think that AR glasses wouldn't really be a mainstream product until we had full holographic displays. And I still think that that's going to be awesome and is the long-term mature state for the product. But now it seems pretty clear that there's also a meaningful market for fashionable AI glasses without a display.
Dude, it is
Glasses
dropping
are
hard. We were down
the
almost
ideal
17%,
device
guys.
for AI assistant
That
because,
ticker is
you can let
bleeding.
them
I'm going to zoom
see
in
what
here.
You see and hear what you hear.
Oh,
So they have full context on what's going on around you.
Oh, it's just
as they help you with whatever you're
it's
trying
almost
to do.
18.
Our
What?
launch this week of Meta AI with Vision on the glasses is a good example where you can now ask questions
Sorry
about
for
things
your
that you're
loss,
looking
dude.
at. Now, one strategy dynamic that I've been reflecting on is that an increasing amount of our Reality Labs work is going towards
He's
serving
literally
our
talking
AI
expenses.
we currently report on our
19%. We're heading
financials
towards
as a family
19.
of apps and Reality Labs. We're two.
This company has lost
completely
almost
separate
20%
businesses,
of its
but
value,
strategically,
1/5.
I think of them as fundamentally the same business, with the vision of Reality Labs to build the next generation of computing
1/5
platforms
of its value today,
in large
guys.
part, so that way we can build the best apps and experiences on top of them.
Oh, shit.
Over time,
Under
we'll
400.
need to find better ways to articulate the
He's
value
literally
that's
talking
generated here
expenses
across
the
both
entire
segments, so
time.
it doesn't just seem
Nobody
like our
wants to
hardware
hear
costs
this.
increase as our
He's like, hey, guys,
ecosystem scales.
For the next 2 years,
but all the value flows
we're
going to
spend a shit ton of money.
The Ray-Ban Meta Glass
For the next 2 years, we're going to spend shit tons of money. That's what he's doing right
continue
now.
to do well and are sold out in many styles and colors. So we're working to make more and release additional styles as quickly as we can. We just released the new Cat Eye Skylar design yesterday, which is more feminine. And in general, I'm optimistic about our approach of starting with the classics and expanding with an increasing diversity of options over time.
Stop the call.
If we want everyone to be able to use wearable AI,
This is not going
I think
well.
eyewear is a bit different from phones or watches in that people are going to want very different designs. So I think our approach of partnering with the leading eyewear brands will help us serve more of the market. I think a similar open ecosystem approach will help us expand the virtual and mixed reality headset
This is
market
the
over time as
Zuckerberg
well.
that everybody
We announced that we're
hated
opening up Meta
in
Horizon
2020.
OS, the operating system we built
Or
to power
2021,
Quest.
2022?
As the
2022.
ecosystem grows,
This
I
is
think
the
there will
one
be
everybody
sufficient
hated.
diversity
Oh,
in how
let me
people
fix that.
use mixed reality that there will be demand for more designs than we'll be able to build. For example, a work-focused headset, maybe slightly less designed for motion, but may want to be lighter.
Somebody
by
get Zuck
connecting to
off
your
the
laptop.
fucking line.
A fitness-focused headset may be lighter with sweat-wicking materials. An entertainment-focused headset may
Take what is
prioritize the
better.
highest resolution displays over everything else. A gaming-focused
why does that
headset may
happen?
prioritize peripherals and haptics, or a device that comes with Xbox controllers and a Game Pass subscription out of the box. Now, to be clear, I think that our first-party Quest devices will continue to be the most popular headsets, as we see today. and we'll continue focusing on advancing the state-of-the-art tech and making it accessible to everyone. But I also think that opening our ecosystem and opening our operating system will help the overall mixed reality ecosystem grow even faster. Now, in addition to AI and the metaverse, we're seeing good improvements across our apps. I touched on some of the most important trends already with WhatsApp growth in the US and AI-powered recommendations in our feeds and Reels already. But
I'm going to move over to some slides real quick while he's talking, just so you guys can get more updated information. I think we should be good on visual stocks.
On Facebook that brings together Reels, longer videos, and live content into a single experience with a unified recommendation system. On Instagram, Reels and video continue to drive engagement, with Reels alone now making up 50% of the time that's spent within the app. Threads is growing well too. There are now more than 150 million monthly actives.
Oh, that's not it.
And it continues to generally be on the trajectory that I hope to see. And, of course, my daughters would want me to mention that Taylor Swift is now on Threads. That one was a big deal in my house. All right. That is what I wanted to cover today. I am proud of the progress we've made so far this year. We've got a lot more execution ahead to fulfill the opportunities ahead of us. A big thank you to all of our teams who are driving all these advances, and to all of you for being on this journey with us. And now here is Susan.
They're like, get off the line.
Thanks, Mark, and good afternoon, everyone. Let's begin with our consolidated results. All comparisons are on a year-over-year basis unless otherwise noted.
Oh, okay.
Q1 total revenue was $36.5 billion, up 27% on both a reported and constant currency basis. Q1 total expenses were $22.6 billion, up 6% compared to last year. In terms of the specific line items, cost of revenue increased 9% as higher infrastructure...
Just look here for a second, guys. Future EPS guidance and revenue actually still look really good.
Driven mostly by higher headcount-related expenses and infrastructure costs, which were partially offset by lower restructuring costs. Marketing and sales decreased 16%, due mainly to lower restructuring costs, professional services, and marketing spend. G&A increased 20% as higher legal-related expenses were partially offset by lower restructuring costs. We ended the first quarter with over 69,300 employees, up 3% from Q4. First quarter operating income was $13.8 billion, representing a 38% operating margin. Our tax rate for the quarter was 13%. Net income was $12.4 billion, or $4.71 per share. Capital expenditures, including principal payments on finance leases, were $6.7 billion, driven by investments in servers, data centers, and network infrastructure. Free cash flow was $12.5 billion. We repurchased $14.6 billion of our Class A common stock and paid $1.3 billion in dividends to shareholders, ending the quarter with $58.1 billion in cash and marketable securities and $18.4 billion in debt. Moving now to our segment results. I'll begin with our Family of Apps segment. Our community across the Family of Apps continues to grow, with approximately 3.2 billion people using at least one of our Family of Apps on a daily basis in March. Q1 total Family of Apps revenue was $36 billion, up 27% year over year. Q1 Family of Apps ad revenue was $35.6 billion, up 27%, or 26% on a constant currency basis. Within ad revenue, the online commerce vertical was the largest contributor to year-over-year growth, followed by gaming and entertainment and media. On a user geography basis, ad revenue growth was strongest in Rest of World and Europe at 40% and 33%, respectively. Asia Pacific grew 25% and North America grew 22%. In Q1, the total number of ad impressions served across our services increased 20%, and the average price per ad increased 6%. Impression growth was mainly driven by Asia Pacific and Rest of World. Pricing growth was driven by advertiser demand, which was partially offset by strong impression growth, particularly from lower monetizing regions and services. Family of Apps other revenue was $380 million in Q1, up 85%, driven by business messaging revenue growth from our WhatsApp business platform. We continue to direct the majority of our investments toward the development and operation of our Family of Apps. In Q1, Family of Apps expenses were $18.4 billion, representing approximately 81% of our overall expenses. Family of Apps expenses were up 7%, due mainly to higher legal and infrastructure costs that were partially offset by lower restructuring costs. Family of Apps operating income was $17.7 billion, representing a 49% operating margin. Within our Reality Labs segment, Q1 revenue was $440 million, up 30%, driven by Quest headset sales. Reality Labs expenses were $4.3 billion, down 1% year over year, as higher headcount-related expenses were more than offset by lapping inventory-related valuation adjustments and restructuring costs. Reality Labs operating loss was $3.8 billion. Turning now to the business outlook. There are two primary factors that drive our revenue performance: our ability to deliver engaging experiences for our community and our effectiveness at monetizing that engagement over time. On the first, we remain pleased with engagement trends and have strong momentum across our product priorities. Our investments in developing increasingly advanced recommendation systems continue to drive incremental engagement on our platforms, demonstrating that people are finding added value by discovering content from accounts they're not connected to. The level of recommended content in our apps has scaled as we've improved these systems, and we see further opportunity to increase the relevance and personalization of recommendations as we advance our models. Video also continues to grow across our platform, and it now represents more than 60% of time on both Facebook and Instagram. Reels remains the primary driver of that growth, and we're progressing on our work to bring together Reels, longer-form video, and live video into one experience on Facebook.
I just wanted to say real quickly, Reels is an opportunity for these guys, especially if there's a TikTok ban.
Which is
Everybody
increasingly
will go
powered
to Reels.
by our
I
next
strongly
generation
believe
ranking
that.
architecture that we expect will help deliver more relevant video recommendations over time. We're also introducing deeper integrations of generative AI into our apps in the US and more than a dozen other countries. Along with using Meta AI within our chat surfaces, people will now be able to use Meta AI in search within our apps, as well as feed in groups on Facebook. We expect these integrations will complement our social discovery strategy, as our recommendation systems help people to discover and explore their interests, while Meta AI enables them to dive deeper on topics they're interested in. Threads also continues to see good traction as we continue to ship valuable features and scale the community. Now to the second driver of our revenue performance, increasing monetization efficiency. There are two parts to this work. The first is optimizing the level of ads within organic engagement. Here, we continue to advance our understanding of users' preferences for viewing ads to more effectively optimize the right time, place, and person to show an ad to. For example, we are getting better at adjusting the placement and number of ads in real time based on our perception of a user's interest in ad content and to minimize disruption from ads, as well as innovating on new and creative ad formats. We expect to continue that work going forward, while surfaces with relatively lower levels of monetization, like video and messaging, will serve as additional growth opportunities. The second part of improving monetization efficiency is enhancing marketing performance. Similar to our work with organic recommendations, AI is playing an increasing role in these efforts. First, we are making ongoing ads modeling improvements that are delivering better performance for advertisers. One example is our new ads ranking architecture, Meta Lattice, which we began rolling out more broadly last year. This new architecture allows us to run significantly larger models that generalize learnings across objectives and surfaces in place of numerous smaller ad models that have historically been optimized for individual objectives and surfaces. This is not only leading to increased efficiency as we operate fewer models, but also improving ad performance. Another way we're leveraging AI is to provide increased automation for advertisers. Through our Advantage Plus portfolio, advertisers can automate one step of the campaign setup process, such as selecting which ad creative to show, or automate their campaign completely using our end-to-end automation tools, Advantage Plus Shopping and Advantage Plus App Ads. We're seeing growing use of these solutions, and we expect to drive further adoption over the course of the year while applying what we learn to our broader ads investments. Next, I'd like to discuss our approach to capital allocation. We continue to see compelling investment opportunities to both improve our core business in the near term and capture significant longer-term opportunities in generative AI and Reality Labs. As we develop more advanced and compute-intensive recommendation models and scale capacity for our generative AI training and inference needs, we expect that having sufficient infrastructure capacity will be critical to realizing many of these opportunities. As a result, we expect that we will invest significantly more in infrastructure over the coming years. Our other long-term initiative that we're continuing to make significant investments in is Reality Labs. We are also starting to see our AI initiatives increasingly overlap with our Reality Labs work. For example, with Ray-Ban Meta smart glasses, people in the US and Canada can now use our multimodal Meta AI assistant for daily tasks without pulling out their phone. Longer term, we expect generative AI to play an increasing role in our mixed reality products, making it easier to develop immersive experiences. Accelerating our AI efforts will help ensure we can provide the best version of our services as we transition to the next computing platform. We expect to pursue these opportunities while maintaining a focus on operating discipline, and we believe our strong financial position will allow us to support these investments while also returning capital to shareholders through share repurchases and dividends. In addition, we continue to monitor an active regulatory landscape, including the increasing legal and regulatory headwinds in the EU and the US that could significantly impact our business and our financial results. We also have a jury trial scheduled for June in a suit brought by the state of Texas regarding our use of facial recognition technology, which could ultimately result in a material loss. Turning now to the revenue outlook. We expect second quarter 2024 total revenue to be in the range of $36.5 to $39 billion. Our guidance assumes foreign currency is a 1% headwind to year-over-year total revenue growth based on current exchange rates. Turning now to the expense outlook. We expect full year 2024 total expenses to be in the range of $96 to $99 billion, updated from our prior outlook of $94 to $99 billion due to higher infrastructure and legal costs. For Reality Labs, we continue to expect operating losses to increase meaningfully year over year due to our ongoing product development efforts and our investments to further scale our ecosystem. Turning now to the CapEx outlook. We anticipate our full year 2024 capital expenditures will be in the range of $35 to $40 billion, increased from our prior range of $30 to $37 billion as we continue to accelerate our infrastructure investments to support our AI roadmap. While we are not providing guidance for years beyond 2024, we expect CapEx will continue to increase next year as we invest aggressively to support our ambitious AI research and product development efforts. On to tax. Absent any changes to our tax landscape, we expect our full year 2024 tax rate to be in the mid-teens. In closing, Q1 was a good start to the year. We're seeing strong momentum within our family of apps and are making important progress on our longer-term AI and Reality Labs initiatives that have the potential to transform the way people interact with our services over the coming years. With that, Krista, let's open up the call for questions.
Thank you. We will now open the lines for a question and answer session. To ask
First question, why did you let Zuck
star
talk
one
so long?
on your touch-tone phone. To withdraw your question, again press star one. Please limit yourself to one question. please pick up your handset before asking your question to ensure clarity. If you are streaming today's call, please mute your computer speakers. And your first question comes from the line of Eric Sheridan from Goldman Sachs. Please go ahead.
Thank you so much for taking the questions. Maybe I'll ask a two-parter. Mark, you used the analogy of other investment cycles you've been through around products like Stories and Reels. I know you're not giving long-term guidance today, but using those analogies, how should investors think about the length and depth of this investment cycle with respect to either AI and or Reality Labs more broadly and mixed reality? And you both talked about the impact AI is having on the advertising ecosystem. What are you watching for in terms of adoption or utility on the consumer side to know that AI adoption is tracking along with the investment cycle? Thank you.
Good question.
Yeah, in terms of the timing, I think it's somewhat difficult to extrapolate from previous cycles, but I guess like the main thing that we see is that we will usually take, I don't know, a couple of years, if it just, I mean, it could be a little more, could be less, to focus on building out and scaling the products. And we typically don't focus that much on monetization of the new areas until they reach significant scale, because it's so much higher leverage for us just to improve monetization on other things before these new products are at scale. So you enter this period where I think kind of smart investors see that the product is scaling and that there's a clear monetizable opportunity there, even before the revenue materializes. And I think we've seen that with Reels and with Stories and with the shift to mobile and all these things, where basically we build out the inventory first for a period of time and then we monetize it. And during that time when it's scaling, it's sometimes it's
Talking
not
about
just
it
the
scaling
case
and
that
smart people
we're not
needing to
making
look
money
at
from that thing. It
and
can
not paying
often actually
attention to
be the
fact
case
they
that it
don't know how to monetize it. It's
displaces
not
other
good.
revenue from other things. So like you saw with Reels, it scaled and there was a period where it was not profitable for us as it was scaling before it became profitable. So I think that's more the analogy that I'm making on this. But I think it's what that suggests is that what we should all be focused on for the next period is as the consumer products scale, Meta AI really just launched in a meaningful way. So we don't have any kind of hard stats to share on that, but I'd say that's the main thing that I'm focused on for this year and probably a lot of next year is growing that product and the other AI products and the engagement around them. And I think we should all have quite a bit of confidence that if those are on a good track to scale, then they're going to end up being very large businesses. So that's the main point that I was trying to make there.
Your next question comes from the line of Brian Nowak from Morgan Stanley. Please go ahead.
Great. Thanks for taking my questions. I have two. The first one is on sort of the recommendation engine improvements, and even Susan, when you talked about further opportunities to increase the relevance of the models. Can you just unpack that a little bit for us? Can you give us examples of where you're still running the models in a suboptimal basis, or opportunities for improved signal capture use or data you're not using? Where are sort of the areas of improvement you see from here? And then the second one, when you talk about driving incremental adoption of AI tools for advertisers, what are sort of some of the main gating factors you've encountered to get advertisers to test these tools? And how do you think about sort of addressing that throughout 24 and 25? Thanks.
Thanks, Brian. So to your first question, where are there more opportunities for us to leverage and improve our recommendations models to drive engagement? One of the things I would say is historically, each of our recommendation products, including Reels, in-feed recommendations, et cetera, has had their own AI model. And recently, we've been developing a new model architecture with the aim for it to power multiple recommendations products. We started partially validating this model last year by using it to power Facebook Reels, and we saw meaningful performance gains, 8 to 10% increases in watch time, as a result of deploying this. This year, we're actually planning to extend the singular model architecture to recommend content across not just Facebook Reels, but also Facebook's video tab as well. So while it's still too early to share specific results, we're optimistic that the new model architecture will unlock increasingly relevant video recommendations over time, and if it's successful, we'll explore using it to power other recommendations. An analog exists, I would say, on the ad side. We've talked a little bit about the new model architecture at Meta Lattice that we deployed last year that consolidates smaller and more specialized models into larger models that can better learn what characteristics improve ad performance across multiple surfaces like feed and reels and multiple types of ads and objectives at the same time. And that's driven improved ad performance over the course of 2023 as we deployed it across Facebook and Instagram to support multiple objectives. And over the course of 2024, we expect to further enhance model performance and include support for even more objectives like web and app and ROAS. So there's a lot of work that we're investing in the underlying model architecture for both organic engagement and ads that we expect is going to continue to deliver increasing ads performance over time. The second question you asked was around getting advertisers to test and adopt Gen AI tools. There are two flavors of this. The more near-term version is around.
All right, I'm bored too. Pull over. I think a lot of the good stuff was said. I think the thing. So real quickly, I think the thing that's hurting them right now on this call was just focusing on all the expenses, telling people that it's going to take years of additional spending. I don't know. There's so many probably other things that they could have pitched. I think, like, again, talking about Reels and opportunity for growth, and just think like there could have been better ways to put out the pitch deck than just focusing on all the expenses and how you're going to spend shit tons of money. It literally sounds like Zuck in 2022 when everybody was shitting on the stock and it got into the 80s and I bought a bunch of calls. So we'll let him keep doing this for a while. And if you look at the ticker, it's just barely riding above the fib line here. So that's kind of a painful range. Not a good conference call for Meta. Again, even just like the fundamentals aren't horrible at all. Having a bad quarter is like okay. Again, estimates going forward are not bad. It's just a very bad presentation and focusing on all the bad things potentially, right? All the things that people don't want to think about. Higher expenses, they don't want to think about that. You don't need to like advertise that unless you're really trying to lowball the stock and get the price down. I don't know. But that's my take on that. And again, I think the important thing to note is that if there is a TikTok ban, I do think that Facebook is probably the biggest beneficiary of it, especially with Reels, at least for now. So you can't discount that. This stock could bounce a lot if that ends up being true. I don't know what it looks like from a vote perspective, though. Does Ross Gerber hold Meta? I hope so. And I'm sorry for anybody who lost money today, man. It sucks. I get it. But yeah, if there's anybody that should lose money, it's probably going to be Gerb. All right, let's get back over to the ticker symbols here and look at some other stuff. So yeah, this stock, this Emergent Biosolutions. Let me look at the financials on it here too. Where was I on there? Way over here. All right, let's pull up EBS, look at this one, and then we'll move on to other stuff. Hey, thank you, Publius. No, I'm sorry, shouldn't do that. Should not make fun of the names of people that are. All right, here we go. Making mental note. Emergent Biosolutions. We're going to pull them back up again. We're going to look at their estimates. Oh, yeah. Okay, we did. Yeah, so I don't know. I can't support this company just because of the fact that they literally give something to keep drug users alive so that they can keep doing what they're doing and destroying their lives and potentially dying again every day. I don't know, man. It's just like such a fucked up business to try and make money off of. I don't know. I feel bad for people in that situation. We need to stop giving them fucking drugs, especially for free. All right, let me see here. So I'm going to move this over here, and then I'm going to see who is next on the ticker here. Let me see. Hello, sir. Zscaler. So I got, hey, Jesse, wondering if you can look at EBS. Oh, that was you. Sarthak, hello, sir. Won't be able to catch you when your stream starts. If you have time, can you look at ZS Scalar? Would love your opinion. Okay. We can do that. Let me just save this other one in case I end up pulling it up again for some reason. But yeah, the financials didn't look too great on that one for EBS. And you know what I should do, just to be fair? Let me look at revenues too. So revenues are down year over year. And net income, again, let's look at yearly, see if we can get a better view. So they were having a real good peak up until 2020, and then they've been falling off, and their debt load is high, and their net income sucked for, 2022 and 2023, and it's getting maybe a little bit better. I just don't see anything that's really interesting. The market cap is $113 billion, if I'm reading this correct. Is that right? Let me look over here. Or I'm sorry, is that million? $114 million. But they don't have really any positive margins, so it's like, whatever. Intelligent computing. Ugh, Meta gonna pass on this one. Fuck Zuck. Well, you missed it, man. If you didn't like Zuck, this is a perfect one to watch. Luis Martinez. Hey, Jesse, if you check charts today, do you think Celsius has gone up too much for entry? It has done really well. Their financials, when are their earnings? I know I got a few. I think even maybe my friend Alejandro here that does visual stocks, I think he likes these guys too. I know a few people that follow him a lot. Now, we did have a retracement, so it's down, what, 65? It was 99. So that's a 35% drop. That's pretty healthy. But it's a $16.7 billion company. But if we look here at the financials, they are not ugly at all. At least the last time I looked at them. Now, this could be a thing. Things like this, like hot drinks or like things that are really popular, I worry that sometimes they fall out of favor. And we can see where Q4 took a dip, and maybe that's probably why the stock dropped, because it just took a dip for the first time in a while. Their forward PE is 47 even now, and their PE is 78.51. This is looking at massive amounts of growth. They did grow almost 100% in revenue year over year last year. And they show, guidance-wise, strong growth still. But when you're growing at that rate, you're going to start to eventually lower. So I don't know. This will be an interesting one. It could be a dip buying zone. Doesn't have quite the asymmetric opportunity, I think. I'm looking for, just because of the PE. Again, if it lost a decent percentage, it would still be pretty well valued. So that kind of sucks, right? To me. Hey, Jesse, what's going on with Poet? Now, this is one, Poet is one that ticker symbol U, a YouTuber, posted about. He's very much into like, chips and stuff like that, and network related things. And I think this is like an optical company or something. I don't even know it well. But I think he does a lot of that. And this is one of the 3 stocks he was recommending. So it might have ran, 44%. That is fucking stupid. Are there any actual announcements, or is it just this guy making a video? 2 days ago, why Vaxanity shares are trading lower by around 50%. Poet Technologies announces management role change 7 days. There is no real news on this. So this guy made a YouTube video, and this went from 70 cents to $2.40, and now it's up even more in after hours, up 50% on the day. I would be afraid to jump into this. What is it? $97 million for the valuation. Let's look this up. But again, he's very optimistic about this. Boy, if he's literally the person who moved this, I hope he disclosed his positioning. Because that's fucking crazy. Now, again, revenue is not great on this company. Very low revenues. Negative net income of $5.6 million. And and their cash is burning away. And their guidance is still to lose money. Their revenue is going to go to 1 million, 1 million, 1 million, but they're going to lose 5 million a quarter. So I think it's literally because that guy made a video. I would not chase this shit until you really, really fundamentally understand why it's good. I would not chase this. This is the kind of stuff that happens. People make something about something and people get excited about it. They don't even know what they're getting into, but it's such a small cap at right now, $92 million, that people will just pump the shit out of it with very small amounts of money. So I don't know. Personally, I'd be a little scared about that one. I would be scared. Luke Automata, last 2 days flying. Let's see. All right, Darcy. Hey Jesse, new to the site, but been following you for a while. Love your insights and vision. Thank you. Luke Automata, I hear you. Same. Math wise, will Meta break above 515? No, Matt. I'm gonna place a bet that Meta will not break above 515. All right, let me see here. Jesse, yesterday before close, sold all my PayPal and I bought June 2026 instead. That's awesome. I think I said that earlier, at least maybe I typed it out. Kumar Giodi, you said you had a 50% gain on Tesla option call. That's not your total gain, right? No, my total gain, I'm flat to down probably a couple percent on my Tesla calls, but I think I'm going to make a shit ton of money off of it, millions of dollars in the next couple of years on the low end. So 50% was good for a day, but people that would have been, my cost basis is a lot higher. On those calls, it was like $20 in the June 2026 330 strike. And it was down in the 13 range. So people that were able to buy there and that were getting in later but listening to me, those are the ones that did really good. Actually, I find that a lot of times. Sometimes I'm early to things, and people that are patient can really get good prices. All right, I'm still down 6%, so I got confused. What are you down? Oh, yeah, and your overall. Yeah, no, I get that. You probably bought it earlier like me. That would make sense. Charlie Massey, good. George Manassis, good afternoon. Les Walter, let's give a thumbs up. Yeah, if you guys haven't liked, please do that. Otherwise, you're a dick, and you don't want to be a dick. Brian, what's up with Flux? I missed your play here. All right, let's take a look at Flux. I don't think it did very good today, but I mean, shit happens. Let's see here. Flux, what the Flux? And this isn't really my play. I did make a short video about it for members only, but I don't even know I didn't. I don't even think I did. I think I just got this from Rex. He's huge on it, and he gives all the reasons why, and they're good ones. And then I did a little bit of due diligence, but like nothing crazy. From a technical perspective, though, I love this one because even though it's been chopping down for a while, it's had bullish divergence on the RSI that goes back to March of 2022. So you got 2 years of RSI divergence that wants to break higher. And honestly, if we look up here at the MACD, it's got a similar thing where it wants to break up. Now it's meandering a little bit here on the shorter time frame, but on the weekly, this thing looks like a beast. It looks like it could go a lot higher. And if we look to the fundamentals, it's only a $70 million company. I moved the stock like 5% one day just buying it my own without even talking about it. So it's definitely something where it's just really small. But if we look here, consistent revenue growth, only 7%. They definitely had a period of chopping down, but their net income is getting ready to guide up towards being positive for the first time in a while. And share dilution isn't super crazy. Operating expenses have started to chop down. Cash flow looks like it could turn positive. And if we look at estimates, it looks like they're really working towards that over the next few quarters. So this is like one I put like 50 grand. So, it's not a huge amount of money. Or at least for me. I mean, maybe for some people it is. And so it's a very, very small play. Like it's less than, it's like 1.7%, right? 1.6%. It's not a big, it's just a, hey, if Rex is brilliant, he's like 26 years old, but he's brilliant and he does really good due diligence. And if he believes very strongly in it, I'm willing to take a risk with 1.8% of my portfolio for an asymmetric bet that the actual owners of the company are buying into too. If you look here, going back years since 2018, they're buying their own stock in mass, and even more recently here, not as much, but like definitely more bought than sold. 338,000 shares bought. I like to see that. And short interest is almost down to nothing on this one. So I like this play for an overall opportunity. I don't think their stock-based comp is very high either. Yeah, it's only like 2% of revenue. So this is not a bad-looking company in my mind. It's not bad at all. And if they can just start getting profitable, it'll be interesting. It's interesting, the mix too. You don't see insiders usually holding this much still of the stock. And then you got retail and then you got institutional. So they definitely have an incentive They have an incentive to do well with this company and to do it right. And again, maybe it turns into nothing and I lose 1.8% of my portfolio. But if it does do well, $70 million market cap is nothing. If this company started actually like printing $1 million a quarter, that would actually, in and of itself, would probably double them. And if they could get to, a couple million, they would start doing really well. And their revenue right now, let's look at this last quarter, is 18 million, and they lost 0.8. So this is something, this could be a turnaround story. That's the only reason I'm interested in it. All right, what else we got? John, ENVX. Financials are not great, but curious what you think about these silicone lithium batteries. Supposedly are safer and more efficient. Not sure if there is a Tesla. No, Tesla doesn't. No, I don't think Tesla definitely wouldn't do anything speculative at all. I can look it up. My guess is they're just a company that's losing shit tons of money. Oh, here, let me do that. I need to actually pull them up. ENVX. Had the wrong one in there anyway. I don't know if I have them. Let me type it in right, though. ENVX. No, I do. Okay, cool. I think I've looked at them before, and I think their financials are not great, if I remember. Yeah, look at that. That's a bleed. So since 2023, it went from $24 to $6. That's pretty painful. It's a $1 billion market cap. Let's look at the financials, though, because that tells you a lot. I'll try and look at live chat, too. I need to balance the two. I know I need to do that. ENVX. You think you ever do this on Spaces? I don't know. I don't like Spaces as much. Do you guys like Spaces? I do like it where you can just communicate with a bunch of different people. I mean, that part's probably cool. I just don't know that the tool isn't that great. Anyway, operating cash flow was fucking abysmal last quarter. This company's debts are going up a lot. Their cash was doing all right. Back in 2023, they looked better than they do now. But, I mean, so what are they losing? Free cash flow, negative 101 million. Is that million? That is million. So I don't know what's going on with this company, but super choppy revenue. Super choppy. And they are forecasting that they're making more, $4 million a quarter, but they're still going to lose plenty of money. And they're a billion-dollar company. So the valuation to me for somebody who's got just insanely choppy revenues is not great. It's not great. So I don't know, personally, I don't love this. I don't know. X sucks. So X sucks for streaming video right now. Their tools are just garbage in comparison to YouTube. And I love the concept of Spaces, but I don't know. I just don't know. There's no monetization factor behind it. So the incentive for me, at least from a financial standpoint, of being able to maintain the work that I do and potentially get help to pay for the tools and all this other stuff, it just isn't there. I hope they get better. The subscription service, I haven't even gotten that. I've been waiting a year almost for the subscription service. And that's why I ended up doing YouTube. So, I mean, like X just they got a lot of things they're trying to do. If their tools get better, then sweet. But their tools kind of suck. A lot of them do. Christopher Brown, you're the man, Jesse. Just finishing the Bitcoin Standard and already read the Elon book. I'd be grateful for any other recommendations. Those are all great. Let me see. If you've read the Bitcoin Standard, I would do the Price of Tomorrow by Jeff Booth. That's a really great. It'll help tie in how technology is creating deflation and what Bitcoin can do for the future of humanity, and then there's just a lot of good stuff there. I think you'd like it. Hopefully the mic didn't mess up there. Sorry, guys. All right, let me see here. Alex, okay, you were talking about Meta's price, which is down now almost 17% on the day for Meta. They have not had a good day. Jacques Kingdom Sounds, EPS. Oh, okay. You were just giving the info. Lisa Marie, it was all up to Elon, and he said what was needed to be said instead of the nightmare of his rant last earnings. Love Elon, is brilliant. Honestly, I don't feel that way at all about Elon. I think there's sometimes where he tells you what you need to hear because that's what's going to happen with the company. For a year and a half, he was saying that there were tough times ahead and people didn't listen to him. And there were, and the whole auto sector got hit by it. He definitely was negative in the last earnings call, and I think that drove the price down even more. But I think he said what needed to be said, and I think he set up the shorts for disaster. Their narrative is fucked now. And it wasn't just about what Elon said during this conference call. Tesla literally executed amazingly well, and they have such a solid foundation on AI, autonomy, and robotics. I think people are going to start to realize the value the company holds. It's not Elon. Elon has the right to say whatever the fuck he wants. That's my take on that. And I appreciate him being honest. And I want to hear the truth from him above all else. Beer Belly Daddy. All right, I'm happy you joined, just for the name, if nothing else. Kumar Giotti, I bought 5,000 Meta at 490. Oh, you got 5,000. I'm sorry, Kumar, if you're even still here. If you took a break and started drinking, I would understand. Kyle Alexander, whenever you have the chance, can you go over Biden's tax proposal on capital gains and unrealized? I need to. I heard something about like 45, like the highest rate that we've had like ever. I don't think it passes, man. It won't pass. But that's just a stupid fucking thing to do before an election, too. Start talking about capital gains expenses of that. Every stock voting investor is definitely not going to vote for that guy now. If you're a liberal and you have investments, you're not going to vote for Biden. But I will go over it. That kind of stuff intrigues me, so I will go over it. And then I'll report on it, maybe make a video or something. Celis, Meta, and ByteDance are two companies that the world does not need. I agree. Lisa Marie, I am a Tesla believer and a heavy stockholder. I know that. I am happy for you. You're definitely going to benefit in the days and months ahead, I'll tell you that. Alex Garcia, at least my Meta average cost per share is 165. That's good. Yeah, I don't know. It's kind of hard to know where we're headed right now with Meta, right? It's really hard to know. That call was not great. Tom Kraus, it was just released. Oh, okay, that was there. When you mentioned 50% gains. All right, I already did that one. RJ Cohen, any book recommendations on options leaps? Not really. I learned the hard way. I learned how to lose money with options, and then it made me quit investing for 7 years because I fucking fucked up so bad in 2008. But then I took the time to really understand macro and options and just the markets in general, and that gave me dramatic new insight onto just the reality of them and when they should be used and how powerful of a tool they are. So things have changed a lot, but I don't have any books that really can tell you more. I did make a video, Options 101. I might do some follow-ups. I try and keep it simple because I don't want people delving into a bunch of different option strategies where they don't understand the risk. But maybe I'll become, more complex over time. But definitely watch the video if you haven't. JP Stowe, higher expenses seem like an issue. Yes, they do. Talking about Meta from earlier. George Manassas, Ford running after hours. Cool. Yeah, I think Legacy Auto is probably going to do really good over the short term because they're still pushing a bunch of inventory on their dealers. But over the next couple years, man, they're just going to be fucking destroyed. Just utterly destroyed. Meta Platforms continues to expect operating losses for Reality Labs to increase year over year. Yeah, and then he just sold that over and over and over again in the call. Alex, correct. Just today, not total. Made Jensen. SE, also great call on Tesla. I can pull SE up. Let me see here. Is that an energy company? I don't remember off the top of my head. What is it? Oh, I better pull it up over here. If you guys can mark with a $sign when you're doing a stock too, it helps. It lets me know if it's like the ticker or ticker. I hit the wrong one. The ticker. There we go. All right. SE. Oh, C Limited. Yeah, I remember this one. Okay, cool. And it's popping too. Hey, it did break above the 100. That's cool. I found it in that nice little space here and grinded higher. What is this one? 35 billion? Let's look them up here. There we go. I just want to remember what their financials look like in their forward. Yeah. So this looks good, right? Like the company has got increasing revenues, and their EPS is going to go up. Their net income is probably going to become positive. There's kind of a general trend here that you don't hate, right? But their revenue is 3.6 billion, and they did have a couple quarters where they netted 321 million. It's not a bad number. They need to start bringing in more and more revenue, but not bad. Not bad. Had a nice little bounce. If you're going to get resistance, you're going to get it up here at the $80 range. And just by looking at their financials, I mean, again, they could hit here and maybe slow down, but getting a run to 80 isn't bad. All right, let me roll through the rest here. Meta is now down almost 17% for the day. Memento Mori. Okay. In a few weeks, all Meet Kevin followers are gonna be here. They should be if they're smart. Don't get me wrong. Actually, there's parts of Meet Kevin I like. He's just gotten really arrogant as of late, and I hate arrogance when you're wrong. That's just not healthy, and especially again, like if you change your positioning and then you all of a sudden change the way you act towards everything, I think that's bullshit. I don't like that. I don't think that's fair. You need to still be intellectually honest, and if nothing else, for the people that follow you. Bitcoin might be a stable coin at this rate. I would argue that Bitcoin has done really fucking great, and it will be a stable coin for a few months, and then it'll fucking take off like a rocket ship. Jody Slaney, FSLY. Sure, we can do that. FS. I don't know if I have this one. It kind of rings a bell. Fastly. Let me see. Oh, I should try and find the ticker. And I don't think, now that I look it up, I don't think I have that one. FSALLY. Whoa, was it already 5? All right, I'll do a couple more of these and then I'll probably stop. I didn't realize how long we were here. FSLY. Fastly. All right. Under the 100. 1.72 billion. Definitely had a drop, right? We were in the 140, 130s. And yeah, so 90% drop on this thing. That's pretty crazy. That was painful for anybody involved in these guys. Was it FSLY? FSLY. Fastly. I will be buying more crypto as we drop. More Bitcoin related investments. I hope we drop more. I really do. Especially if Tesla's going up and I'm making a bunch of money on my calls while we're dropping. This is an interesting play with Fastly. Revenues are still growing. 149 projected for Q3. EPS is getting almost flat. What's the activity look like on this one? 15% year-over-year growth. Institutional ownership is growing. Insider activity, kind of flat. Not too much happening recently. 8% short interest. Software application. What is this company? And let me just see. They're valued at 1.7 billion with 137 million in revenue. Not a crazy number. They need to get profitable. An edge cloud platform that enhances digital experiences by ensuring quick, secure, and reliable processing and delivery of applications close to users. Serving prominent companies like Pinterest, the New York Times, GitHub. New York Times. They probably won't be around in the future. So if I'm judging it based off their customer base, it's like hit or miss. GitHub isn't going anywhere. That's interesting. It just depends on how well they can monetize stuff. They're still diluting shares. I probably wouldn't be too interested in this one right away, even though it's dropped a lot. We are finding support on key volume, though. And I mean, shit, it was up to $25. Maybe as a swing, you could get back up here. But you're going to need to fundamentally start making more in revenues for it to go much higher. All right, let me see. Oh my God, poor Jesse, no gold card. Yeah. C-list, medium, small violin. Okay. Brian Mayer, sell my BTC for MSTR. Maybe. You could do that. I don't know why this keeps happening. Stop killing my Windows trading view. I haven't went into anything else. Yes, Mint on iOS and app profit sharing. You could sign up for iOS until 2022. Okay. Oh yeah, and then they took it down for the join button maybe. Year over year is pretty good. All right, I'm probably gonna kill it here, guys. If I missed you, I'm sorry. Make sure that you get your comments as early as you can when the feed goes live. That ensures that they'll be answered. And tomorrow, it looks like we will try and do Google earnings. We'll at least see if we can capture the main stuff. Probably won't go super in depth. Here's the thing: I'm just trying to ascertain for advertising dollars. I want to see if there's a general trend where ad revenue is starting to go down between like Google and Meta, because I don't want to see that. I want to see ad revenues continue to go higher. And as you see with Meta here, it's still falling. It's down like 17.5%, almost 18% on the day. And I want to see if Google has a similar trend, because that might give us some macro perspective where we need to be a little wary. We don't want to see ad revenue going down. So I probably will do Google tomorrow too for the conference call and the earnings. And if it gets boring, I'll throw out a vote. And if it gets boring and people start shifting to being tired of it and wanting to get back to the market recap and getting through more tickers, we'll do that. We do have, it's earnings season, so it makes it kind of where I need to understand the earnings of powerful companies that make up a large amount of GDP and that could be indicative of the macro. And I want to understand these companies better, so that's why we're doing it. And again, but we'll try and do, if nothing else, we'll try and do more of the market recap too, and going through the tickers and just get your stuff up and early. And thank you guys for anybody who made it here for over 2 hours. You're troopers. I don't know how you did it. Love you guys. Take it easy. Have a good night. And let's do it again. Peace out.